The German elections outcome and important data releases will definitely keep the FX market busy this week as well. Welcome to XM.com. This is the week ahead. I'm Christina Marujos, and with me to unpack this busy week is our lead market analyst, Rafi Boyajian. Rafi, starting with the euro, the German elections on Sunday are likely to be crucial for the entire Eurozone. So how could the election outcome affect the European Central Bank's policy stance and, of course, the single currency?
Well, Christina, indeed, there's a lot of attention on the German elections, mainly because we have the far-right AfD party, which kind of had a disappointing performance in the last general election. This time, they seem to be making a very strong comeback because they're likely to end up being the second biggest party in Germany, ahead of the SPD, which is, the current ruling, the main party in the current ruling coalition. And the main worry is that, of course, the main parties in Germany are going to end up being even weaker afterwards, and so that's going to make it difficult for them not to be influenced in any way by the far-right agenda, which is, of course, to have tighter migration controls. And, of course, we know that President Trump, Elon Musk also have been supporting these sort of more extreme parties across Europe, and they could, really have implications in terms of the political landscape in Germany and in other European countries as well. But purely from a market perspective, I think it's not so much about the AfD, because I think as things stand at the moment, most likely it's going to be the CDU-CSU bloc, which are, of course, ahead at the moment in the polls, that they will probably try to form some kind of a grand coalition with the SPD party in an attempt to keep the AfD out of power. So it's very unlikely that we would get any kind of coalition that's going to include the AfD. And so whatever other coalition makeup that we're likely to get, the question is, are the main parties going to try and do something about this rule that Germany has regarding the debt brake, which is basically putting a limit on how much the German government can spend in any given year. And so Germany, of course, we know that has seen 2 consecutive years of drop in GDP. They're in a recession. The outlook isn't looking too great given the tariff situation with the US, given the slow economic recovery in China. And so the German economy really needs some kind of a boost. And investors are hoping that when we get a new government, they're going to be willing to change those debt rules to enable the German government to borrow more, to invest more, and lift the economy out of the doldrums. And so should we get some kind of grand coalition, which would indicate, willingness to reform the debt rules, and also that we would possibly end up with a stable government, that could be positive for the euro. But I think any gains of the euro will probably come a bit later on once we have some kind of confirmation about, reforming the debt brake rule, which would be positive not for just German economy, but that would also support growth in the euro area as a whole. In the event, though, that we don't get much excitement out of the German elections, we're still going to be watching the preliminary CPI data out of Germany at the end of the week, because, of course, we've been seeing some uptick in inflation in Germany and across the euro area. So any sort of signs that, we're seeing inflation starting to come down again, I think that would be positive in terms of rate cut expectations, but also positive when it comes to the euro.
I see. Now let's cross into the United States. CPI inflation ticked up in January, so all eyes will be on the Fed's preferred inflation metric, which of course is the PCE inflation report out on Friday. What are we anticipating to see in the data, and how might that affect the Fed's policy stance moving forward, and of course the US dollar?
Yes, so we were just talking there for Germany and the Eurozone, where the ECB has been able to cut rates despite a small increase in inflation. Now, in the US, the rise in inflation has been a lot stronger, and the growth in the US also is a lot stronger. So that's why the Fed has now gone on pause, and the latest signals we've been getting is that they're going to stay on pause possibly for the next few meetings. And then even though we got in the last CPI report, which was pretty strong, pretty hot, investors didn't really react the way one would have expected. And so one of the reasons for that is that they're hoping that the PCE inflation, which, as you said, is kind of more important for the Fed, that's expected to come in somewhat softer. So we, at least according to the Cleveland Fed's nowcast model, we should see core PCE ease to 2.6 or 2.7. And that would, I guess, be good for the markets in the sense that, we are seeing that recent uptick kind of leveling off and starting to come down again. However, markets are not really preparing for the possibility of any upside surprises. And even if we see the headline figures maybe ease back a little bit, any upside surprises in possibly the month-for-month prints might really spook markets, and that would be a sign that inflation isn't really under control still in the US. And we'll also be going to be getting quite a lot of other data as well, including durable goods orders. With the PCE report, we also be getting the all-important personal consumption data as well as the possible revisions to fourth quarter GDP. So it's going to be a fairly busy week for US data. So let's see, whether or not it's going to really change the outlook when it comes to the Fed policy rate. But if nothing much changes, and we see further dollar weakness, then we should not rule out the possibility of, say, some risk of episode in the markets, potentially on the back of fresh tariff headlines or further deterioration in relations between President Trump and Ukraine's President Zelensky. So those kind of headlines could stoke some risk of moves, potentially helping the US dollar to rebound.
Well, Rafi, you're absolutely right. It's going to be a very busy week on the data front, not just in the United States, but globally. We're also anticipating important data releases from Japan, Australia, and Canada. So how could these data sets affect the yen, Aussie, and Loonie?
Indeed. So starting with the yen, we're seeing both inflation and growth data in Japan kind of coming in a lot stronger than expected. So next week, we're going to be getting the preliminary estimates for Tokyo region in terms of the CPI numbers there. We could see perhaps a slight drop that month. Overall, though, the picture that we're seeing is that inflation is trending higher again in Japan. Growth is solid. So that would basically support the need for further rate hikes. I think there's a risk that markets maybe are not being aggressive enough in terms of rate hike expectations. There's a risk the Bank of Japan might hike interest rates sooner than expected. So any data that supports that kind of speculation would be further supportive for the Japanese yen. And also finding support lately is the Australian dollar, because, of course, although the RBA has started to cut rates, it was a hawkish cut that we got, and that's because inflation is now kind of seems to be bottoming out. We've been seeing the monthly CPI readings kind of edge higher in the last few months. So unless we see any signs that inflation is now coming back down again in Australia, the RBA is likely to remain hawkish. So that would be again supportive of the Australian currency against all the geopolitical risks, including, of course, the slow recovery in China. And then finally, in Canada, we're going to be getting the fourth quarter GDP numbers. The BOC really should be thinking about going on pause at the moment, but they haven't been able to do that because of the tariff threat hanging over the Canadian economy. However, should we see stronger than expected growth data out of Canada, maybe that might encourage the BOC to maybe tone down their dovish rhetoric and be more confident about going on pause soon. And that would, of course, help the Canadian dollar against the US dollar.
Rafi, it was great having you with me. Thanks so much. This was The Week Ahead at xan.com.